So guys, good afternoon. Today we'll be talking about breakouts and fakeouts. So before we start, I would like us to understand what breakouts means. Breakout simply means a break either above or below a key level area. And your key level area can be a support and resistance area, can be your candle bar area. Just like the examples of key level areas I sent to you. You can watch the videos on key level areas. So don't forget, breakout is a close above or below a key level area. When it is a break above, we call it a break up. When it's a break below, we call it a break down. But in general, breakout simply means a break above or below a key level area, which can be your support or your resistance area. Now, there are two mysteries I want you to understand about the breakout. The first is the time frame, and the second is the candle close from the main time frame. Like I wrote it here, the mystery of breakout is between the time frame and the candle close from the main time frame. In a nutshell, you must understand how to spot your main time frame. You must understand how to spot your main time frame. Only then will you be able to understand fully well what a breakout is and what a fake out is all about. You must understand where the main time frame is. The main time frame is key once more when spotting your support and resistance region. Another thing I want you to understand is this. It is only when you spot your main time frame well that you could be able to differentiate between a fake out and a breakout. Like I said here, fake out only occur when you are not looking at the main time frame. Yes, when you are not looking at the main time frame. Of course, we'll be going down to give more examples on breakout and fake out. But first of all, you need to understand this concept. If it's not from the main time frame, your breakout could be false, which will make it what? A fake out. And if it is not coming from the main time frame, you can be faked out. Please have that in mind. And your breakout is defined with two things, which are the main time frame and the candle close. Now, having discussed what the main time frame is, what about the candle close? The candle close is just simply the bar that shows you that what we have the breakout. Now, when spotting your breakout, you want to look for your support and resistance region. You want to apply your support line, your horizontal line to that key region. Then after that, you want to see a candle close, a breakout, a full candle close above or below your line. So, like I said, this is the first step. You locate the main time frame. Now, I am having with me Euro USD weekly charts here. Now, if you notice, just from what we talk about the main time frame, we have the trends of candles, the candle trends there. We have over 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days, 9 weeks rather, of a bullish candle. And what happened? We have the 10, 11, and we have the first opposition bar, which gives us the what? The support, the resistance region, which is this bar. This is the first opposition bar, which gives us the what? The resistance region. Now, if you notice, I said something here. I said, wait for the close above the support or resistance feed area. Some of you might be wondering, what do I mean by feed area? Good. Let me explain this. Just like we have an electric feed area and a magnetic feed area, it is still the same concept. And what is that concept? Wherever the magnetic field extends to, that means wherever you have a magnet and you bring a magnet towards that other magnet, there's a particular area, a field area, whereby the force of the magnet is very effective. And whenever your iron object move closer to that magnetic field area, it magnets it immediately, attracts it immediately. That is what I mean by the magnetic field. Those regions whereby the magnet moves round. The region where we can still see the presence of the magnetic field region. That is what I want you to understand. The same thing happens to support and resistance field region. Now the support and resistance field region are mainly filled with the weak. Are mainly filled with what? The weak. The weak. Now, let's take for example this particular region. We have this 1, 2, 3, 4. This, I'm looking at this particular region right now. This. Then we have our first opposition bar. Now when you look at this particular place, if you will agree with me, this particular area here, the weak of these two bar, has given us a strong resistant region. But because we are having what? We are having price going up above this level, then retracing back down to give us a bearish bar. At the end of the week, extend the what? This particular resistance field to this particular top. Now, having explained what that support and resistance field is all about, I want us to now take note of what? The fake out. We have a fake out bar here, and this is here. Now remember we said something. The main time frame. Now let's assume we spot our main time frame as the daily time frame, which is this particular area here. We spot our main time frame as the daily time frame. Then because of we saw a close, we saw price trending at this region, we decided to take a buy. Now taking a buy at this region will have taken us out because we'll be having a loss of over 347 pips. We're having a loss of over 347 pips. Now that is not what we wanted at all. We don't want that. What we actually want is what? We are looking for a pure breakout. And that is why even at this region, some of us will say this is a breakout. Let me put this particular region here. Some of us will call this a breakout. Yeah, we have a breakout. No. When the price was still here. But what happened? Price turned back down. Why? Because this is not the main time frame. This is not the main time frame. Our weekly is the main time frame. And that is why you are seeing what? The week from this zone. And what happened to price? Price finally fell down, giving us the range, the weekly range. Now, upon giving us the weekly range, what happened? We are still looking for the range. Now, we have located the main time frame. Now, we have located the range. Now, we wait for the close above the support or resistance field area. In this situation, it's a buy. So, we are looking at the resistance field area. So, now, look at what happened. Since we have this particular bar here, this particular bar has extended the support, the resistance field area. It has extended the resistance field area in the sense that we no longer have our resistance at this particular place. We now have it at this particular what? This particular tip. And that is the breakout we are looking for. We are looking for the breakout of that particular what? That particular tips. And what happened? This is the breakout. This was the breakout. We have the candle close. This is it. We wait for the candle close from the main time frame. The main time frame is the weekly, and the candle close. Look at it. Price close above, and that's why you could see price extend higher again, giving us over 207 pips in the next 3 weeks. Can you see? This is how the breakout comes into play. Now we'll take another example. We'll take another example, for example 2. Example 2. Now, as in example 2, in this scenario, price already got to the top. Price already got to the top. We have the top here. And we have the drop. But what happened? Our area of focus is this place. Look at it. Can you see? On a normal, price closed there. Went higher, but did what? Refused to go above this level. What is it trying to do? It's trying to form the feed area with the wick. Trying to form the feed area. So we now have a new feed area, which is this particular low. Look at the low. I'm picking the low of this particular bar. The low of this particular bar. The low of this particular bar where my crosshair is. That's what we are picking as our feed area for this downside. And the high of this particular bar is our feed area for the upside. And what happened? We saw what? We have located our what? Our main time frame, which is the weekly time frame. And we have what? A candle close at the end of the week. Note, the candle close must come at the close of that particular bar on the main time frame. In the sense that if it's the monthly time frame is the main time frame, you have to wait for a monthly close. If it's the daily, you have to wait for a daily close. If it's the 1 hour, you have to wait for a 1 hour close. This is how to spot your main time frame, your breakout on the main time frame. And look at what happened. We have what? Another 260 pips going downward. We have another 260 pips going downward. Now that is example number 2. Example number 3. Yeah. This particular bar, we have our weekly time frame giving us the what? The main time frame, the first opposition bar. Don't forget the opposition bar. Then we see the next week closing above it. This is it. That is a confirmation we have a bullish move. And what happened? The next 2 weeks so far has given us what? Over 171 pips. This is how to spot your what? Your breakout. Please practice this. This is how to spot your breakout. This is how to spot your breakout. Your fake out will only happen, like I said, will only happen when you are not looking at the main time frame. When you are not looking at the main time frame, that is when you will see your fake out. Let us take another example on gold. And do we have them? Another example on gold. Good. Now, let me clear my shot. Okay, good. Now we saw this in our previous chart. I'm very sure you understand why price started reversing from here. And so we have the breakout of the divergence formation and the double bottom. And what happened at the end of the month? We have a close above. So we are looking for what? The bullish side of gold. Now if you look at this, price went higher. Now we want to look for a situation whereby gold, yeah, the weekly time frame happens to be our main time frame. Yeah, good, happens to be our main time frame. And then we have this. Now because the weekly time frame is our main time frame, some of us will assume, okay, we have a daily time frame as the main time frame, and say, okay, we have a breakout. This particular bar breaks out from this particular region. And what do we expect? We are expecting to see what? Price go bullish. We are expecting to see price go bullish. But what happened to price? We saw price coming back down to touch our moving averages. We saw price touching back our what? Our moving averages. We saw price touching our moving averages. So that will be a complete fake out. If you look at it, it is going to be a complete fake out. That will be a complete what? A complete fake out. That will be a complete fake out. To be a complete fake out. It's going to be a complete fake out. And do what? Price is going to take you out from here, and when it takes you out from here, you'll be in what? Losses. But because you know that the main time frame is the weekly time frame, this is it. This is it. Because you know that this is the main time frame, weekly time frame, you are waiting for a weekly breakout, and this was the weekly breakout. Can you see? And price did what? Price advanced over 900 and something pips. This is how you are to spot your breakouts. And look at this situation when the daily is the main time frame here. Look at this, there is no opposition bar on the day weekly. When daily becomes the main time frame here, what happens? We have the breakout, and we have what? We have price shooting up. So this is how it's being done. This is how it's being done. You have to know your main time frame, spot your main time frame, wait for the candle close above the main time frame. That is your breakout. That is your valid breakout. So please, let's put this into practice. Let's put this into practice. Then I will in the next video show you how to take trade based on breakout and fake out. This will bring us into what? Our final lecture, which is based on entries. So thank you.